Hello and welcome to the trade on this Tuesday afternoon. It's the 17th of January. My name is Kyle Rodder. So let's get to my guest for the day, and it's Hebe Chen from IG Australia. Hebe, thank you so much for joining us. It's fantastic to have your company on the trade once again. We've got three stocks that we're going to go through today. Kick us off with the first one because we're going to go through a bit of a technical story. We're going to go through the fundamentals, and we're going to be looking at a couple of stocks, or a stock here, but also a couple abroad as well. I think we're going to begin with JB Hi-Fi.
Yes, JB Hi-Fi made quite a couple of the headlines today because they just reported a record high sales numbers and also the EBITDA earning before the tax and interest number. So basically, from the first half of the financial year 2023, the JB Hi-Fi has been reported a strong growth in terms of sales, 6.8%, and coming to the $5.3 billion of sales, and which the other figures I think that JB Hi-Fi should be most proud of is their margin-wise. The margin has increased about 14%. I think that you can definitely see quite a strong effort that the JB Hi-Fi's management level has putting into. I think even you considering that the about 7% of inflation rate in Australia, and they still deliver quite a strong profit margin-wise. So because of the positive news, we're seeing the share price for JB Hi-Fi jumping about 4% today. And if you're checking a little bit back from the first day of the 2023, the price has already been up about 15%. One of the key quite significant breakout has happening today after the company reporting a positive news that helped the share price for the JB Hi-Fi jumping up roughly about approaching the $48.50. So there's a gap in between the 47.2 to 48.50 because that's the gap left over in the last June. So the price is trying to kind of approach this gap multiple times for the past 6 months. And today is the time that they finally managed to overcome that. But just not far away, we're seeing another pressure level, which is coming from the March 2022 is roughly about 48.60. So we can see the price, today's price action is kind of trying to consolidate these levels and trying to overcome this hurdle. So which for now, I can expect some of the bit of the price moving back and forth around this level because this is quite a key pressure. We definitely can expect here of setting pressure from this level before the price trying to kind of looking towards the 50, which is quite a significant psychological level. But even if the price didn't get to manage jumping up, a bit of a pullback happening, that is also possible because if you're looking for the RSI coming to the oversold territory as well. So meaning probably I think some of the profit takers or probably after the price have been jumping up 15% in two weeks time, but still according to the charts, there's quite a strong ascending trend line here is ready to be supporting the price if there's some of the pullback in the near term. But overall, I think for the near term wise, I definitely see some of the positive momentum for JB, given that the strong report and kind of strong sales and retail sales market is still pretty strong. If you're checking based on the recent Australia's retail sales turnover rate, is still seeing quite a strong demand from the consumer market. But for the bit longer term wise, based on today's report, the JB Hi-Fi is expecting a bit of a decline or the softening in terms of demand towards the Q2 of the 2023. So they're kind of expecting roughly about 5% of a decline in terms of sales and revenue towards the second half of the financial year. But overall, still, I think this is a company still in a good shape and quite a strong momentum and fundamental factor to help the company to move stronger for the longer term.
Let's flick over to the first US stock that we want to have a gander at because it's reporting in the next few days, and that's Netflix. Really interesting price action at the moment. Would you like to take us through what to expect out of this earnings report, as well as obviously what the charts are trying to convey at the moment?
Yeah, you're right. Netflix will report their Q4 earnings on Thursday, and not only because this is one of the first technology company to report their earnings, but according to their previous history, Netflix has quite a proven record of like a strong volatilities after the earnings. Just for the reference, for the Q1, the last year's Q1, Netflix share price dropping as much as 32% after the earning. And for the Q3 and Q4, they're jumping as much as 7 to 16%. So that's another reason that probably people will be or investors quite keen to know how they're going to deliver, what kind of result they performed. That's looking at the number wise, which I put up the charts for the expectation there. So you can definitely see that this is not going to be a quite impressive data-wise report. They're expecting the earnings will be just quite similar to what they present a year ago, only 9.9% of the improvement, and that's compared to about 16% in the previous quarter. So quite a lot of not improved that much, you can say. And also in terms of a margin wise, that's not a good number as well. They only expect about 4% of a margin compared to about 23% in Q3. Well, a couple of the reasons why they're not kind of optimistic about this is because first, on the Q4 is often the time that the company is spending quite a lot in terms of creating the content and also the spending on the marketing. And second reason which the company contribute quite a lot to is the headwind for the USD dollars, because we know 60% of the revenue for Netflix is coming from the overseas market. So a strong USD dollars means the revenue will be heavily discounted. And so that's why they always quote it as a strong headwind for the company's margin performance. But if you're putting into more optimistic view or lens, that you can say that these is two factors are more temporary, they probably not will be eased or even erase getting into the 2023. But one of the things that I'm probably most concerned about is that if you're looking for the charts on the left bottom, that is the showing how they perform compared to the competitors. We all know the streaming industry is quite highly competitive. But if you compare to the growth capability for Disney, they still enjoy kind of double-digit growth, while Netflix is only increased or improved year over year about 5% or even less than 5% probably in the Q4. So that will be the key headwinds if looking for the longer-term view for the Netflix. But putting aside that, let's looking at the chart and the price-wise. So the Netflix share price is jumping up about 90% from the July last year. It's just after their Q2 report. So it's quite remarkable if you compare to the raw market performance, and 90% is quite outperforming. And now you see the price is kind of strictly following these moving tunnels and coming to this $332 mark. And this is a key hurdle because that is tracking back into the March 2022 low level. And moving up there, you can see the band in between the 330 to 395 will be quite a lot of selling pressure accumulated in this level. So I think that's quite likely the best scenario we can see if the report coming out as the exceed the expectation, that it's more likely because the expectation is pretty low for now. So if the chance that the market is happy with the report, the chances are we can see the price kind of overcome this upper boundary hurdle and enter into this 330 to 395 band and kind of consolidate around this area. On the other hand, we potentially will see a bit pullback if the report doesn't satisfy the buyers. And at least in this scenario, we see some of the pressures, some of the support levels will be supporting about $300, and that's where this 50 and 20 days moving average sits at this stage. So overall, and the other thing also you need to notice is the RSI also approach oversold territory as well. So for the near term, we'll see how things going and if any surprise will coming from the earnings report on Thursday.
Yeah, it's going to be an exciting one. One that drops obviously just before our market opens and obviously our morning. So plenty of fireworks, or at least we can hope, for Netflix shares. Obviously been a wild ride over the last 12 months, as you can see on that chart. But let's go and take a look back now to some results last week that we didn't probably speak enough about, at least here. Just considering its vital importance as a economic barometer, but also its role it plays in, I suppose, conversations around geopolitics and strategic issues across the globe. TSMC, of course, that's Taiwan's semiconductor manufacturing company, reported last week. Take us through the company here, and to my eye, it looks like we're seeing potentially a breakout in its share price.
Yeah, I know I've been talking about this company for a couple of times. It's a good timing to talk about it again and just kind of update what's happening for the company. What is the outlook for the 2023? So you say they just reporting the earnings last week, and the numbers which I put up in the chart here, the quarter four earnings. So overall, I think this is one of the fantastic reports. There's nothing much you can complain about it. Most of the in terms of margin was but earning wise and a lot of things that it kind of delivered to the upper end of the expectation, especially looking at the margin wise that even improved the margin from the 50% to 52% in the fourth quarter. So if looking for the rear mirror, I think the company definitely delivered quite a strong report during the year of 2022. But one thing that kind of caught everyone's eyes is that the expectation for the new year, they're definitely not seeing quite a easy year. For TSMC, even they still kind of expect a strong demand for the market. One of the key example, if you're looking for the performance of the fourth quarter, is that you can see that's already showing the early sign of a decline in terms of a smartphone market. There's a 4% of decline in terms of revenue, and that market has contributed roughly about 40% of the revenue for TSMC. And just for the reference, in the Q3, that smartphone market that has improved about 25%, and for the last quarter, it's a decline 4%. So it's quite a big wide range in terms of the demand for market. And in plus that is we know the biggest client for TSMC is Apple, and they already has reporting expecting a bit of decline in terms of demand for the new year as well. So overall, they're expecting for the 2023, they're expecting about 5%, again, about 5% to 10% decline in terms of a revenue wise. If that's the case, that will be one of the worst result for the company's past 5 years. So the outlook doesn't seem pretty easy, but one thing positive you can take in positive is that the company started mass production, one of the highest end chip, which is 3 nanometer, and that is the highest end in the market, which will be applied in the latest version of the iPhone. And TSMC will be taking about 90% of the market in terms of this highest end market. So that is definitely will something contribute or offset a bit of the headwind in the broad economy downtrend. Let's looking at the price wise. So you can see that the earnings from last week has helped the company to kind of overcome this 6 months long trend line from the June to August, and now it's a bit of breaking out and moving towards its 200 days moving average. So that is quite a positive side for the near-term outlook for the TSMC. And also the other breakout, which you can notice, is jumping up from this like a moving band, which is happening from the end of November, and then trying to moving towards the about $90 mark. And if that's the case, if they manage to keep advancing and towards $90, the chances are they can making about 5 months high levels by the end of January. So that is there something they can expecting. On the other hand, even we see something pull back the pressures, but we definitely can see the trend line will continue to be a key support to see the price will be moving above this $80 mark. So overall, I think for the near term wise, we can definitely expect some of the challenges, some headwinds for the TSMC. The one thing that I want to point out is that in terms of the new year wise, we know that TSMC is investing quite heavily to building up the factory in the US. That will be one of the key factors that could potentially impact on margin wise, because a big chunk of money have to invest to building up new factories. So in terms of the margin wise, revenue wise, probably will see some of the revisions or some of the downgrade in 2023, but overall, I think there's a long-term investment and it will be beneficial for the company's long-term outlook.
Yeah, as we said, a really important company there, a very significant stock to watch. Hebe, it's great to get your insights as always. Really appreciated those 3 ideas. Managed to touch on several thematics, several parts of the world and several key events. So we'll wrap it up there for today, but Hebe Chen, IG Australia, talk to you soon.
Thank you, Carl. Thank you. Have a good afternoon.
Okay, well, before we hand over to Startup Daily, let's get a quick hit from Lizzie O'Neill at the Cboe Australian Markets Desk. Lizzie, what are we watching out there?
Good afternoon, Carl. Well, the local market is in negative territory at the moment, relatively flat though. But we have a bit of corporate news out that I'd like to get you across, one of them being from Rio Tinto. It's released a production update. Fourth quarter iron ore shipments have risen 3.8%, while copper production was up around 6%. But the miner notes commodity prices found support in the final quarter of last year, but the end of COVID restrictions in China and increases in cases brings high volatility for the coming quarter. Meanwhile, its Pilbara operations were up in 2021. Inflation is likely to have pushed its Pilbara iron ore unit cash slightly above the top end of its guidance range. As you can see today, Rio is down just over 1%, its share price at $120.61 at the moment. also the buyout bid for Origin Energy has had a bit of a delay. It will extend the exclusivity period for the consortium led by Brookfield to allow more time for it to finalise its $15.5 billion bid. Due diligence will continue until January 2024, and it's the second extension that Origin has granted. The consortium is proposing $9 per share, a price the board has previously said it would back if a formal proposal was made, but Origin shares are down today 2.74% at $7.45 a share. And also a laggard on the market is Hub24. Its expense recognition for FY23 has increased by $2 to $3 million. Total funds under administration is around $73 billion as of the last day of September. Now it's down almost 3.5% today. Its share price is $26.89, if I'm reading that correctly, Kyle.
Thanks for that update, Lizzie. We'll talk to you again a little later on in the afternoon. Lizzie O'Neill there from the CBO Australian Markets Desk. But that does it for this edition of The Trade. Be sure to tune in tomorrow. We'll be back with all the trading action. Stick around. Startup Daily is coming up next.
The Trade is brought to you by ACY Securities, Tim Cahill's official FX and CFD trading partner.